8 amazing ways to raise capital for your business. How many of us have great business ideas, but we don't know how to start because of lack of funds? If you want to know how to raise capital for your business, you're not alone. While we are living in financially challenging times, there are several ways you can seek funding for your business, some more traditional than others. If you are pondering on how you are going to fund your startup, this video is for you. We created this video to give you some valuable ways you can raise capital. Steve Jobs once said, "If you are working on something that you care about, you don't have to be pushed. The vision pulls you." So if you have that business idea, finance shouldn't be a factor to hold you back. Before we jump into these valuable ways of raising capital, please go ahead and give a thumbs up. Without any further ado, here are the 8 ways to raise capital for your business. 1. Bootstrapping. When starting your business, many young entrepreneurs use bootstrapping. Bootstrapping means financing your company by scraping together any personal funds you can find. This typically includes using your savings account, credit cards, and any home equity lines you may have. In many cases, using the money you have instead of borrowing or raising is a great approach. Some entrepreneurs continue to bootstrap until their business is profitable. This can be beneficial because it means you won't have extensive loans and monthly payments that bog you down, especially if you run into snags along the way. But if you're looking to scale your business quickly, it can be advantageous to bring in outside sources of funding. So, what happens when your funds run out, or you decide you need something more? That will ultimately depend on the type of business you're building, but there are some common places to start. Brent Gleason, leadership and team building coach specializing in organizational transformations, states, if you believe in your vision and have an absolute refusal to accept failure as an option, you should feel comfortable investing your own money into the business. 2. Consider asking friends and family. Asking your friends and family for money to start your own business might seem like a daunting prospect, but tapping those closest to you is often a good first step before getting external funding. And hey, it can never hurt to ask. According to the Global Entrepreneurship Monitor, 5% of US adults have invested in a company started by someone they know. While your family or friends are probably not in a position to finance your entire new venture, they may be impressed enough to toss you a couple of grants to help you get rolling. It's important to mention that before you ask your friends and family for money, you should have a business plan at the ready. This way, you can explain to them exactly what you're selling, what you plan on charging, how you'll make money, and whether you're asking for a loan, an investment, or a gift, that is. Whether or not they should expect to get back any money they put into your business, and if so, how much. 3. Consider alternative funding sources. If the business venture requires small startup capital, there are quite a few micro-loan organizations that lend to startups and entrepreneurs. Another alternative is the increasingly popular crowdfunding sites, such as Kickstarter and Indiegogo, which provide you a platform to raise money from an individual, small supporters across the web. You'll set up a campaign and name a target amount of money you want to raise, as well as create perks for donors who pledge a certain amount of money. Then, you raise money for the campaign over a specified period. With Kickstarter, you'll only get to keep the money if you raise the full amount of your goal, but Indiegogo will let you keep anything you raise. For more information, check in the description below. 4. Find an angel investor. An angel investor is an individual who provides capital for a business startup, usually in exchange for convertible debt or ownership equity. These may typically operate alone but may team up with other angel investors and form a fund. Knowing this, angel investors can be a good source of capital for your business. First, you must have a solid business plan put together and a great pitch ready. You have to capture their attention with enthusiasm and promising data points about your company's current situation and future potential. You may be wondering how you find angel investors. This might seem difficult, but many resources exist. For instance, funding posts arranges for angel investor showcases around the country. And the Angel Capital Association is a great platform to seek out, meet, and arrange pitches for angels. 5. Get investment from venture capitalists. Venture capitalists typically want to invest in slightly more mature companies than angel investors, and sometimes want to have more of a say in managing the day-to-day operations. Since venture capitalists have a responsibility to achieve certain returns for the firm or fund, they want scalable and cash flow positive companies with proven and scalable products and businesses. If your company satisfies these requirements, you could apply for an investment with a VC firm. It's not the easiest thing to accomplish, but plenty of small businesses have done it successfully. There is a Hasidic proverb that says, "The man who has confidence in himself gains the confidence of others." So with confidence, you can reach out to venture capitalists to invest in your business. 6. Non-profits and foundations. These organizations are famous for bringing money or investment to an audience, usually minorities. It could be for women, populations of specific religion or race, etc. The organizations support the advance of economic development in the cities by supporting specific groups, which can be women in otherwise support of minority business and education. They have grants and loan programs, and also educational scholarship programs to foster entrepreneurship and leadership skills. 7. Government grants and loans. Depending on the country you are in, it is possible to get financing from the government in a kind of microcredit or a grant. This would happen if your business idea contributes to the growth of the country or develop a particular industry or area. In this case, you need to fulfill some legal requirements that will be the specification for the same government, and eventually, you will have a compromise with the government and the country. 8. Consider taking out loans. This is the last option that could be considered to fund your business. If you can show that you've started gaining traction and making money, and that a loan would help you earn even more, you may be able to qualify for a traditional bank loan. Many banks would be willing to lend if you present a convincing business plan. Various banks have recently announced an increased commitment to small businesses. Especially since small businesses employ lots of people and contribute to the GDP, banks are open to assist businesses. We shall leave you with this quote. Johann Wolfgang von Goethe once said, "Knowing is not enough. We must apply. Wishing is not enough. We must do." The key lesson here is that you have many options for financing your business. Don't get discouraged if one doesn't work out. By demonstrating due diligence and being resourceful and persistent, you can raise the capital you need. So if you are serious about your business venture, you can select some of the above ways of funding your startup. We wish you success in this new phase of your life. If you have not yet subscribed, please go ahead and do so. We thank you for checking out our channel. Leave a comment on other business topics you would want us to share with you. Don't forget to check out our other videos in the description below. With that said, have a wonderful day.